Good morning, everybody. The biggest news day of this month is likely to happen today. With today's unemployment numbers, the market's focus. The consensus has us probably 225 now, plus or minus. Goldman came in at 230. We've been looking at 220 for most of the month. Right now, the average of everybody's 228. So what the bureaucracy and the administration and the Fed are hoping for, they're all kind of one and the same, is a rebound from last month's numbers, but not too big as to upset the apple cart, where if they are going to raise interest rates, it'll be right now in September. So if we get a number greater than 250, the interest rate increase, the talk will increase, will be in June now as opposed to September. If we come in at 230, the economy is good enough, strong enough, it's coming back. September looks like the month to do it. As Fisher said, that's the trial balloon that's being floated right now. And if it comes in, say, less than 200,000, because of the 260,000 new jobs that are added from statistical smoothing for April, every year, then the economy is much weaker than forecast, and there won't be an interest rate bump anytime soon. As I've said many times before, it's very, very difficult to see how the Fed can ever raise interest rates without totally upsetting the apple cart, but we will see what happens. So it is down to the news. Now, the way we trade the news is there is no liquidity on the when the news hits. It just totally dries up. And on the note, usually about 30 seconds plus or minus, we'll start to see a bid or an offer come in. So you can fade the news starting at 30 seconds, 30 seconds, 30 seconds, depending on how far you think that number is going to be off. 228 this morning is the average. Less than 200 will explode the market to the upside. Greater than 250 will take it to the downside. Unemployment's expected to drop 1/10 to 5.4, which is a joke when you look at Gallup's payroll to population. The rest of it, the people that have fallen out of the workforce. Average work week will be the third number that they look at 34.5. And then earnings up 0.2, which is the default number. That's where it is every month. Then wholesale trade plus 0.3. So right here is the market's focus. So the news hits. If the market rallies up, your first entry is going to be at the mode mean, leaning against that. The second one will be in this situation the value area high or low. In this case, it would be the value area low, and your third entry would be where the news hits. So usually we enter the market here at this, and sometimes you have to make up your mind pretty quickly. But usually we let the first bar get out of the way. Then if the market comes up and does not take out that high, you exit the trade, or low as the case might be. The other way to trade it is to let the market make its move. In this case, come back and find out where support is, rally up. If the top holds, then we're going to move into development 3, and we'll be trading this line plus or minus 30 seconds. There's a couple of ways to handle this without taking an inordinate amount of risk. The market rallied overnight. The conservatives held on in England, and what that means is that all the votes that the conservative government have done, the status quo has been maintained, so there will be no policy changes in England, and you get used to it, whatever it is. I mean, to give you an extreme example of this, when the Israelites left Egypt and the first time they got hungry, a great deal of them wanted to go back to Egypt because at least they had food in their bowls. So the status quo, whatever it happens to be, that people have gotten used to, that have built their existence around, if it is maintained, most people like that. It's just human nature. So the looking at where resistance is, the 16 to 20 area is where the first little band of resistance will be. And then our second band of resistance will be 24, 28. And I don't think you can, we're going to put the numbers up, but again, these are areas of interest to us. And this is an area of interest because the move started down at 18. Looking at where the market came from yesterday, this against the buck looks pretty strong. So 1 to 5, which is where we were yesterday, would be buy 1. And then 25 to 29 will be buy 2. But we don't, those are just areas of interest. We've got to watch and see what the market does when it gets down to it. These areas offer us an advantage to enter the market at. You have to keep that in mind. It's cliched as hell, but if you know the trade, the news, you've got the trade. There's no way to get around that. And no one ever knows with 100% certainty what the news is going to be, except for those 100 people, give or take, in the government. This number was released to them yesterday at 4 p.m. You wonder where the gold market gets their insight, where other players get their insight. It comes from that group of 100. And they wouldn't share that news, would they? The government right now, it's just running unchecked and unbridled there. Get what you can as fast as you can get it, and we'll see what happens tomorrow. And if something bad happens, it'll probably be swept under the rug, and that's how the government is operating these days. Huge market, big run. The top was set in London. The selling started at 156.23. Then we have 14. Then we have 11. And then 7, 8. And we're currently at 30. So this 8 to 12 area would be the first area that would offer us an advantage. And in the second area that would offer us an advantage would be this 20 to 24. On the buy side, 55.14, so 16 to 20, buy 1. And then well below, we'll make the buck to 08, buy 2. It's just a big market, huge swings. This thing can move 2 points. Normally, we'd expect it to move about a point on non-farm payrolls. But given the volatility that we've had of late, 1.5 to 2 points is probably where you could have a fade order that you can place before the news in anticipation of a reaction that would take you to that level. It's just a big market. Okay, gold was on hold overnight, not much, and you'd anticipate that. There's a French bank holiday, not that France drives the gold market, but the volumes dropped quite a bit overnight. So if we just come in and look at the big picture, we got a seller into the 95, 1200 right now, definitely above 1215, and we have a buyer against 75. So the first area that would offer us an advantage would be getting long in this area. So this 75 to 80 would be the buy 1 area. This market does react. Sell 1 would be 95 to the buck. Obviously, it's a stretch to get there. We're at 85. That's 10 bucks above it. And then if we break the 75 area, 65 to 70 would be the buy 2. But this market gets really, really big swings. And then 1205 to 10 would be the second spot. But you can have a $20, $30 day. On gold if the news is far off of expectation. And there is a lot of policy decisions riding on today's number with, say, 230 plus or minus where the market breaks down right now. They want a good enough number to show that the economy is still growing, but they don't want it too big, which means the Fed will have to raise interest rates yesterday. And they'll probably get that number. I mean, it's the way it works. when they get in their meetings and start doing statistical smoothing, remember that Bureau of Labor Statistics is run by political appointees now under this administration. That's the first time it's happened. And the White House does not take no for an answer. So these political appointees will probably get the administration the numbers in the Fed that they need. Okay, we're going to open it up about 50 to 75 points below on the euro, and then back down to the buck. It's just a big market. There's just not a lot that you can do about this. And then we're going to make 75 to 113 even sell one, and 13 and a quarter, 13.50 sell two. I said in now the euro is not the pound, but the status quo has been maintained in Europe. So England's positions will not change. And everybody likes it because, I mean, you know, look at us. We're pretty comfortable with like fundamentals don't count in the E-mini upon the release and shortly thereafter. In fact, the opposite of the fundamentals is what's driving markets. So we're comfortable working in this environment. We figured it out. And everybody else that has something is comfortable working in this environment. So, you know, we don't like change. That's just human nature. It's the way that we're wired. Okay, looking at crude. Find it. I know it's somewhere. There it is. Saudi is still mulling a direct invasion of Yemen. Their hope is that the backers of the just removed regime will beat the Houthis. They aren't making real fast progress or headway, but there's a lot at stake. You know, who gets to loot their meager treasury? And Saudi Arabia, that's the best case scenario for Saudi Arabia. And Saudi Arabia's got a pretty good carrot out. You put these guys back in power, we'll rebuild your country. So right now, the 59.75 to 60 area is sell one, picking up that black line. Then the spill up here was in the 25 to 50 will be sell two. This market won't be affected by the numbers materially. 50 to 75 buy one. And then 58 and a quarter by two. Now to the E-mini. The E-mini has rallied quite a bit. Backed off of it in the overnight, probably profit taking before this morning's number. A bird in the hand is always worth more than two in the bush. So we got resistance at 90 to 95. Now a 10-point move is what we expect normally when the number hits. So this 95 to 2100 is prime sell territory. And on the buy side, we're at 87, so 75, 77 buy one, 70, 72 buy two, and we'll adjust after the news. 230 trading range is maintained, seller above 2100, buyer below 2075 right now. Pretty tight range. 250, bottom falls out of the market. Fed's raising interest rates tomorrow, not in September. 200 rallies. Fed won't raise interest rates, maybe not even in September. So this is where we're going to be. I think if you're to reflect the macro numbers and not do any statistical smoothing, it would be hard to have a number above 200,000. There are 260,000 ghost jobs that are added just because it's the month of April. So my guess is that with a little statistical smoothing and the rest of it, we're probably going to get the number pretty close to 230. But we'll see. We will see. You don't know the news for sure. 5.4 unemployment down a tenth. Compensation plus 0.2, which is where it always is. Then the next number they'll look at is 34.5. If this number was to fall to 34.4, it would say that the job market is not that strong. Well, figure it out. Davis from Michigan, if the euro reacts to us and if our economy is weaker than thought just before the number was released, the euro rallies, right? If our economy is stronger than the consensus number showed, then the euro falls. So if we come in at 200,000, what would you expect the market to do? The euro, it would rally, right? And if it comes in greater than 250, it would go down. So you have to, this thing reacts stronger than forecast economic numbers, the euro trades lower. Weaker than forecast economic numbers, the euro trades up. And the models, once you understand it, is pretty simple. Again, you just have to, a trader can only react to the headlines. Then the upstairs, the investment committee, the guiding hand, the people that determine what the funds or the portfolios will actually do, they have to read the body of the news. So how do we trade this? The news hits. It rotates up. First place to enter is mode mean. Second place, if the market trades up, would be value area low. And then the third place would be where the news hits. You're long in this particular instance. If we don't take out that high, you get out of the market. Pretty simple. The next way to trade it is let the market get underway. The first move will be back to test and see where support is. Then if it comes up and it doesn't take out that high, we're going to trade development plus or minus 5 and eventually down to 3 points. Okay, take about 20 minutes to get everything up. We'll be back up 23 minutes after the news hits. We'll see what happens in a bit.